Good afternoon, everyone. Welcome to the House Tax Committee. We will call the meeting to order. And first item of business would be requests for bill introductions. Chair would recognize Representative Estes.
Thank you, Mr. Chairman and committee members. My first bill that I'd like to introduce is 23RS0131, an act concerning income taxation relating to credits, establishing a refundable family caregivers of disabled veterans tax credit. My second bill is 23RS0132, an act concerning taxation relating to motor vehicles, authorizing for the purchase of up to 2 motor vehicles owned by resident disabled veterans or surviving spouses thereof to be exempt from tax imposed by the Kansas Retailers Sales Tax Act. And my final bill is 23RS0133, an act concerning property taxation relating to exemption, establishing a property tax exemption for homestead property of certain retired and disabled veterans.
I'm not sure I've ever seen 3 consecutive RS numbers. Congratulations. Committee, are there any questions on the 3 requests? Seeing none, any objection? Seeing none, the requests are approved.
Thank you, Mr. Chair and committee.
Committee, do we have any further requests for bill introductions? Representative Abercamp.
Thank you, Mr. Chairman. Ask for RS 0567. It's a bill that talks about the appraisal letters that go out in the mail. Currently, they have a 1-year look back, so current and last year. This just changes it to a current and past 4 years. I talked to the Department of Revenue last year, and they said it's a pretty simple code change to allow the taxpayer to see the last, a total of 5 years.
Are you referencing the valuation notifications? Okay, thank you. Committee, any questions? Any objection? Seeing none, the request is approved. Are there any further requests for bill introductions? Yes, Representative Stockstill.
Thank you, Mr. Chair. This bill number RS0038. This is the same bill that passed through this committee last year unanimously. It takes the state sales tax off of over-the-counter medications.
Thank you. Any questions, Representative Epley? Oh, okay. Any objections? Seeing none, the request is approved. Representative Epley for a bill request.
Yes, thank you very much, Mr. Chairman. Just being a little overeager, sorry. One of the things long. This is RS0045. This is requesting a sales tax exemption on all building materials for a group that builds beds for children that are underserved or children that are poor. Sleep in Heavenly Peace. I'm aware there are 3 chapters in the state, and they would like to get an exemption for their building materials. Thank you, Mr. Chair.
Thank you, Representative. Any questions, committee? Any objections? Seeing none, the request is approved. Are there any further requests for bill introductions? Seeing none, we will move on to our first item of business, which is a hearing on House Bill 2002. I would first turn to the revisor's office for an overview on the bill.
Thank you, Mr. Chairman. House Bill 2002 would remove the upcoming sunset date that exists in current law for the Taxpayer Notification Cost Fund. Currently, reimbursements from the fund under existing law would discontinue starting with calendar year 2024. The bill would allow such distributions or reimbursements, to be made indefinitely going forward. The fund provides reimbursements to county clerks for the printing and postage costs when taxing subdivisions intend to exceed the revenue neutral rate. With that, I'd be happy to stand for any questions.
I just had one quick question. Do you remember in the definition of printing and postage does that include any labor costs? Is there any definition on, is it envelopes, paper, postage costs? I don't recall there being any defined.
I don't recall on top of my head. I'll look, but I don't believe. I'll take a look at that.
Okay. Committee, are there any questions for the revisor? See none. Thank you for that overview. And we will next turn to the Department of Revenue for an overview on the fiscal note.
Mr. Chairman and members of the committee, Kathleen Smith with the Department of Revenue. We are estimating that House Bill 2002 for the years going forward would have a negative fiscal impact to the state general fund of $1,305,413. We base that on number of parcels that we have in Kansas, which is around 1.6 million. And we had specific costs allocated for printing and postage. We had paper at 1 cent, ink at 5 cents, envelopes at 10 cents, and then the cost for postage at 63 cents. So a total of 79 cents multiplied by the number of parcels is how we came up with our fiscal note.
And did you find in this past year, did all counties submit a request for reimbursement? What did that look like for this last year?
At this point, we have reimbursed $1,123,583. 9 counties did not submit for any type of reimbursement. 9 out of the 105.
Yeah. Committee, are there any questions for Kathleen? Seeing none, that might be the easiest one you have this year.
Thank you.
Thank you for that. Oh, yes, Representative Wassinger.
Thank you, Mr. Chair. Sorry, Kathleen. There's no bulk postage rate that the counties can use, and no
I am not aware of any
discounted postal rates.
bulk postage rate. I do not know.
Does anyone in the room know offhand? Okay, thank you.
All right, committee, we will go ahead and open up the proponent section of our testimony and welcome first to committee Representative Brett Fairchild. I don't think your mic is on.
Thank you for the opportunity to testify in front of your committee today. Since the revisor already went through the details of the bill, I don't know that it's necessary for me to go through the details, but when we were voting on SB 13 a couple of years ago, it just kind of stood out to me or struck me that provision to reimburse the counties only lasted for 2 years and wasn't made permanent. I thought at the time that it should have been a permanent provision. And, I even considered offering an amendment back then to make it permanent, but I was new to the legislature and didn't really know how to do that. And so I just thought it'd be a good idea to introduce this bill this year and just trying to avoid an unfunded mandate on the counties. I think if we're going to mandate this on the counties, then we need to pay for it. We need to reimburse them. We don't like it when the federal government mandates things on us and doesn't pay for it and won't reimburse us. And so this would be the same sort of thing if we were to not pass this bill. If we were just to allow this provision to expire, it could potentially result in an increase in property taxes on the counties. It could end up doing the opposite of what we want it to do. Obviously, the point of SB 13 was to try to reduce property taxes in our state. But if we don't reimburse the counties for their costs, unfortunately, it could have the unintended opposite effect of increasing their property taxes. And so I think it's important that we reimburse the counties for their costs. The fiscal note is only 1.3 million, which obviously compared to the entire budget really isn't much at all. It's just a drop in the bucket. And so I think it's something we need to do in order to avoid imposing an unfunded mandate on the counties. I think all the county people are definitely with us on this. They feel like we need to fund them and reimburse them for this since we're mandating this on them. And so I'll certainly be willing to answer any questions.
Committee, are there any questions for Representative Fairchild? I've got, yes, Representative Corbett, sorry, I couldn't see you over there.
The question I have would be on this money, doesn't the county, aren't they the recipient of all the property tax dollars? We don't, the county gets
Yeah.
most of the money.
Yeah, yes.
I mean, thank you.
Well, if I could clarify, all of the taxing entities, all the jurisdictions, whether it's a city, county, township, cemetery, sewer district, I mean, I don't know what all, they receive their proportion of the tax dollars. But Representative Wassinger?
Thank you, Mr. Chair. I was wondering, and maybe revenue knows the answer to this, was it the county themselves that raised the tax rate, or was it taxing entities within the county that raised the tax rate, which made them have to send out the notices? So if a township raised their tax rate.
Well, I mean, it's based on spending more than tax rates, right? I mean, if the spending level goes up in a year, then every single division has to send out the tax notices. And so it's really not necessarily a tax increase, but just a spending increase as far as I understand the bill. Anytime spending goes up within any of these divisions, the notices have to be sent out to taxpayers.
Okay, thank you.
Representative, if I could clarify just a little bit, and perhaps the revisor can correct me if I misspeak, but each taxing jurisdiction that has the ability to levy ad valorem property tax is responsible for creating their own budget. If that budget exceeded the revenue neutral rate, that is the trigger that would cause these notifications. These are parcel specific, so for instance, a township district would not be able to mail these out on their own because they don't have access to the parcel information as the county clerk would. Now, if the county did not release that information, or if not release the information, but if they hadn't exceeded their revenue neutral rate, the county clerk's office would still be responsible for sending it out for those districts, the jurisdictions that did exceed it.
Thank you, Mr. Chair. But my question is if a separate taxing district raises their spending, why wouldn't then the county charge them for the postage and handling?
I believe that was built into the statute to where they do have the ability to proportionately, according to their mill levy, split that out and assess those costs. That is not in place as long as they're being reimbursed for that. The county can't get reimbursed and then charge each of the tax districts.
Okay, thank you.
Okay. Clear as mud, right? Committee, are there any further questions for Representative Fairchild? I guess I just had one quick question. The tax process for the taxpayers involves several different steps. We heard a bill introduction on the valuation notices that usually goes out sometime around March. That's information for the taxpayer, so they know what the valuation, the assessment is on their property. Then in November, typically November, the tax bills, the actual tax statement goes out to the taxpayer. Neither of those are reimbursed by the state. Those are county expenses. So I guess my question is, at what point does something become valuable information for the taxpayer that would in fact fall under the premise of the tax districts to indeed fund that? I understand it's a mandate from the state, but if our valuation notices are also a mandate from the state, should the state also be paying for those? At what point do we cross that line between what's a necessary unfunded mandate and when should the state be reimbursing?
I would say I'm pretty much against all unfunded mandates. I think if we mandate something on the county, then we need to fund it and reimburse it for it. I'm against unfunded mandates on the counties is how I would answer that. And so anything that we mandate on the counties, I think that we should reimburse them for.
Any further questions? Seeing none, thank you for your testimony. Our next conferee as a proponent is Jay Hall with the Kansas Association of Counties. Welcome to committee.
Thank you, Representative Smith, members of the committee, Jay Hall, Deputy Director and General Counsel for the Association of Counties. I want to take a second, since there were some questions, to just kind of walk through the process of how the taxes are collected and kind of the process behind all of this and how it currently works, so we all have an understanding. So currently, the current state of law is that it requires that the counties send out the notices if the revenue neutral rate were to be exceeded. The county receives that information from all of the taxing jurisdictions within the county that are going to exceed their rate or whether they're going to stay within their revenue neutral number. And that could be any district, whether it's a city, a township, a water district, a cemetery district, a library district, whether they're going to exceed the revenue neutral rate or not. Once the county clerk has all of that information, they will consolidate all of that information onto a single page and will send, or 2 pages, depending on on how many different taxing jurisdictions there are. And they will send that out to each taxpayer based on the parcels that are out there. And so as a taxpayer, you may, if you own 1 property in that county, you may receive 1 notice. If you own 15 properties, you'll actually receive 15 different notices, 1 for each parcel, since they may be in different sub-districts within that county. Once that is done, so the county pays for all of that to go out. Now, as noted from the question before, the county can receive reimbursement from those other jurisdictions within the county, whether that be a city or a township or others. Right now, obviously, we don't receive that because we get reimbursed fully from the state for all of the expenses that go into that. But one of the things that we brought up as KAC when this bill was being discussed a couple of years ago is, let's say, for instance, that you are a cemetery district that covers the entire county, and a year comes up where you as the cemetery district, because the cost of mowing has gone up, need to exceed your revenue neutral rate. But the rest of the county or the rest of the entities within the county don't need to increase their rates. As a cemetery district, you might only be charged, or you may only levy $20,000 or $25,000. But now suddenly you have to add the additional cost of sending a notice to every single taxpayer, and that could be $2,000 or $3,000 or $4,000 because nobody else in the county in that particular year is sending out those notices. And so that's really one of our concerns here, is that all of that burden could fall on a very small taxing jurisdiction in a single year, simply because nobody else may be exceeding that rate in that given year. And so that's really part of what our concern is. However, as I said, once those things are sent out, then the taxpayer receives that information. That's not anything that they are going to, that's not a bill that they have to pay or anything like that. That's just information that gives them the date of the hearing, as well as what that new rate would be compared to last year's mill levies and information like that. And then they can attend that hearing where the actual budget would be voted on. And the dates are given in the statute. So that's really the process that we go through to arrive at this. As it says in my testimony, KAC is supportive of this. Our member counties are supportive of having the state continue to pay for this expense. As I said, part of that is just that even if the county does not exceed the revenue neutral rate, it is still the county's responsibility to send that information out on behalf of the other jurisdictions. And there could be situations where in a given year, because counties, cities have larger budgets, they may have funds in reserve that may not exist for a library district or a cemetery district that may cover the entire county, and therefore have to send out notices to the entire county, which could be several $1,000s. But they may not have that within their budget to do that. And so this kind of helps those smaller jurisdictions, as well as the county, be made whole from that. I think with that, I would leave it open for any questions, since I don't think I'm going to cover too much else that Representative Fairchild did not already cover.
Thank you, Mr. Hall. Committee, are there questions? Representative Corbett?
Thank you, Mr. Hall. I think the intent of this bill was what choices there to maybe limit your jurisdictions from raising taxes. And the bite would be if the cost of mailing it out would exceed the cost of your taxes, maybe you'd take a business file on that and say, it's not worth raising their taxes right now. I mean, I consider this like a business expense. The guy that causes the problem should pay for the mailing, whether it's the city or you can say the cemetery. If you tell him it's going to cost the cemetery $500,000 for mailing, he may not have a tax increase.
And I certainly understand that. Thank you, Representative Corbett. I certainly understand your question. But let's say, for example, that for a cemetery district, for example, generally their only expense is going to be for the mowing and upkeep of the cemetery. So the guy that mows the cemetery and upkeeps the grounds, he says, you know what? I have an increase in my workers' costs. So instead of costing $12,000 like I have for the last 3 years, I have to go up to $15,000 this year, or $13,000, or whatever it might be. Well, cemetery district, they only collect $12,000 in revenue right now because that's all they need in order to have the upkeep of the grounds. If they don't increase, then they say, okay, well, just don't upkeep the last 2 rows of the cemetery. I mean, is that the choice they make, or do they make the choice to say, where does that money come from? I guess is the question in that situation. Do you say we're not going to upkeep the last couple of rows because we can only pay $12,000 because it'll cost $4,000 for us to get a $1,500 increase, or do you say we will upkeep that and we'll try to pull it out of reserves? Or I mean, how do you balance that? I guess it would be the question that I would have.
I think it kind of answers itself. I mean, most of your cemetery districts aren't that big to begin with. But it's a good example for you to give. But on the other hand, there's so many taxing entities in a county. If you give everybody free reign without any responsibility, it'll be back the way it was. I mean, our taxes are going crazy right now all over the state on property tax and something. So I consider the cost of telling me you're going to raise my taxes just a part of your job.
Yeah, if I could follow up just a little bit on that comment, because I appreciate the fact that part of the incentive to not raise taxes is the fact that you're going to have to pay for these notifications. However, when you consider kind of the psychology and all the different ways that could play out, one thing I would like to avoid is the fact that many tax districts, some of the smaller ones like cemetery districts in my area, township districts are very small. Is everybody going to communicate? And okay, the county is going to raise their taxes to put out this notice. So all of a sudden, everybody decides to raise their taxes because they can share that cost more. That would be almost an incentive to everybody lump sum raise taxes at once, which would definitely be a detriment. So there's lots of ways that this could play out that I haven't quite figured out yet. So
I do think, to your point, Representative Smith, I do think there is a possibility that if that were the case, I think a lot of smaller taxing entities would probably say, well, we're not going to raise this year because the city or the county isn't. But in those years where the city and county were, maybe you have to make up for the fact that we've dwindled our reserves down and we need to catch that back up or something like that. And I wouldn't want to see those rates go up all at the same time, I guess would be the thing that I'd be concerned about. Looking at it from the taxpayer perspective of, you wouldn't want to see all of those rates suddenly go up all at once because everybody's trying to get in on the same notice versus maybe going up smaller amounts simply because there wasn't the incentive to avoid that bill locally.
right. And just to further look into the psychology of, as you're building your budgets as a local government, do you actually, when you make that increase, are we going to encourage local municipalities to ask for more than what they probably need, knowing that they don't want to come back and do another notification the next year and the next year. That would result in tax increases at one time that were perhaps more than what they really needed, thinking that they would bank the reserves for a little while and then ask for another increase later down the road.
Well, and one of the things that I had a conversation with counties about is how do you budget for the expectations of this in the future? Because last year's a great example with inflation. The cost of things like repaving and doing work on roads last summer was pretty expensive because of the cost of gas. The cost of patrolling for the sheriff's department was much higher than what counties had anticipated. And so do you build in to your budget this year the possibility that you are going to have a tax increase next year? Or do you just take that out of reserves if you do have it, to where you're building in those funds to possibly send out this mailing on an annual basis, even if it doesn't necessarily go out on an annual basis? And I think all of our counties want to be as fiscally responsible as possible and not have to build in that extra expense that gets passed along, obviously, to taxpayers.
Representative Bergkamp.
Thank you, Mr. Chairman. I know this isn't a big amount, so I don't want to overkill it, but is there a situation where, let's say we go down the road and it's just one or two counties every year that are raising rates and all the other counties aren't, so effectively the state is just subsidizing those handful of counties who are kind of perpetual abusers of the system?
I think if we came to that point, that would definitely be something to look at. I think one of the things that's important to remember is that counties on average throughout the state only get about 30% of the actual property tax amount that actually is collected. And so it's unlikely that counties necessarily would be the driver of sending out that mailing all of the time. It may be schools, it may be cities, it may be townships, it may be water districts, it may be the community colleges. It could be a lot of different entities because there are so many different entities that actually receive a portion of that property tax. And so I don't know if at least at this point, I don't know that we can safely say it may be one or two counties. It may be a certain county, but it's actually this city, and then that city raises it next year, and then this other city and you see one county sending out the bill or the notice, but it's actually a different city every year that's sending out a notice, or a different township or whatever it might be within that county.
No, fair enough. I think it's still kind of the same issue at the root, but thank you.
Representative Francis.
Thank you for your testimony. And as regards your last response to former representative's question, but isn't there a part of this bill that allows for them to get reimbursed by the entity that keeps asking for the increase? So if what you're saying is true, that city that is creating the cost is the one that would be responsible for the increased mailing cost, not the county?
Under current law, that is correct.
Okay.
Okay. Representative Averkamp.
Thank you, Mr. Chairman. Two questions for me. The first one, you had mentioned about the counties are reimbursed their cost. I know what my county clerk told me about some of her costs. Being that a lot of this work is done at the same time as the primary elections, what have you heard from the county clerks as far as the additional cost of the labor and all the other work that they had to add because of all the other work with the elections going on at the same time? Is there cost beyond the mailing? How about that?
There are costs beyond the mailing. I don't know that we can necessarily capture all of those costs. I know that our county clerk's offices were stretched fairly thin, particularly with the amount of issues that were on the primary ballot this past year in particular. was a particularly active primary ballot. And so because of that, they were stretched fairly thin with their staffing. But our county clerk's offices obviously are a lot of great people in those offices that do a great job, and they were able to get through it. But there was a cost in addition to just printing and mailing as far as personnel was concerned.
And then a quick follow-up. So out of all the taxing entities that exceeded their revenue neutral rate and had the hearing, are you aware of any that during their hearing lowered their tax dollar amount to at or below the revenue neutral rate?
I am not aware of anybody that during the hearing, I didn't follow all of the hearings. I know a lot of the ones that either submitted that they would not exceed the revenue neutral rate, but I don't know if any got to the hearing after saying that they may exceed the revenue neutral rate and elected not to do so. I'm not aware of that just because I didn't watch the hearings to see what the final number was in all of those situations.
Representative Turner.
Thank you, Mr. Chairman. Say my question is going to be on a little different theme. As I looked through the testimony, I noticed one of them pointed out that basically 1/3 of the counties didn't satisfy the deadline for filing that was in the bill. Are you familiar with that testimony?
I'm sorry.
There's a piece of testimony that was given specific to this bill hearing that talked about the performance of counties in terms of filing by November 30th of each year. Their tariff, what is they call it? Their final levy sheets.
Oh, yes. Yeah. Okay.
And then only 69 of the 105 counties successfully made that deadline. I wondered if you had insight to what caused 1/3 of them not to make that deadline.
I am not sure of the exact reasons, and so I don't want to speculate as to those reasons.
Okay, so you don't know if it was for reason or for not for reason?
I don't know if it was a reason, and I would be hesitant to speculate on something that may not be the case.
Okay, all right, thank you.
Is that testimony somebody that is a conferee today? Is that a question we could ask them? I'm not sure which one you were referring to. Yeah, maybe we can follow up on that. But are there any further questions for Mr. Hall? Representative Francis.
Thank you, Mr. Chair. Have you seen any data? You'd said that nobody changed the amount of the tax levy as a result of the hearing, but have you seen any data as far as the percentage change or the percentage amount, how it varied this year versus prior years before this reporting was in effect? In other words, was there a behavior change by the counties or other local units of government that because they knew that they would have to have this hearing, that maybe they didn't raise taxes when they would have otherwise?
I know of a couple of counties because they expressly told me that they did not want to exceed the revenue neutral rate because they did not want to send out the notices. But I can't say if that played into the decision making in other places because I haven't been specifically told that, and I don't want to speculate on the motivations.
So it would just be speculation or anecdotal evidence on your part?
Yes, it would be either speculation or anecdotal.
Representative Corbett.
One example that we have in one of my districts in Osage County, the county worked very hard to stay below the neutral rate, while Osage City did not. And your taxes would actually cost you far more to live in this, the city than the county. So that's what happened in that particular instance. So it just goes to show you sometimes maybe Osage City said, maybe write a check. I don't know, but that's what my constituents, when they called, they were kind of wound up about that.
Seeing no further questions, thank you for your testimony, Jay.
Thank you.
Committee, I do not show any further oral conferees. Is there anyone else wishing to testify as a proponent in person for House Bill 2002? Seeing none, we do have I'm showing two oral conferees as opponents, and I would welcome first to committee Michael Kennedy from Douglas County. Welcome to committee, sir.
Thank you, Mr. Good afternoon to all the members of the House Committee on Taxation for the state of Kansas. I'm thankful for the opportunity to speak with you today. As mentioned, my name is Michael Kennedy. I'm a resident of Douglas County, Kansas. I'm here to voice my opposition to HB 2002 as it seeks to make permanent the mechanism within KSA 792989 for the state to reimburse county clerks for notifications sent to taxpayers by county-based taxing subdivisions intending to exceed the revenue neutral rate as described in KSA 792988B2. As a taxpayer, I've experienced my residential property taxes within Douglas County increase over 30% since 2019. KSA 792988, the Truth in Taxation Law, is very important to me. It means to provide transparency and drive accountability by taxing subdivisions seeking to exceed the revenue neutral rate. And this statute is giving taxpayers such as myself notification of potential property tax increases and requiring public hearings where our elected officials must face the patrons to justify their budgetary needs for exceeding the prior year's levies. It is reinforcing the concept that government works for the people and not the opposite. Recently, on December 5th, 2022, my complaint against USD 348 Baldwin City for failure to comply with KSA 792988 in passing a budget which exceeded the levies computed by the revenue neutral rate was heard at the Kansas Board of Tax Appeals. On December 19th, BOTA ruled in my favor, and as a result, USD 348 is required to refund hundreds of thousands of dollars wrongfully levied on taxpayers, such as myself and others within the district. Thus, the statute is having an impact on breaking down the business as usual approach many of these taxing subdivisions have used to bloat their budgets at the expense of taxpayers year after year. Therefore, I find it troubling that in examining the Kansas Association of School Boards 2023 state resolutions, they will be lobbying this body to exempt boards from the revenue neutral rate laws in the future. I urge you to resist lowering the bar for accountability of school boards, who are often the single largest entity within the county by mill rates applied for our property taxes. So this brings me back to HB 2002 and my opposition to its modifications of 792989. I believe that making this mechanism permanent for the state to reimburse county clerks for notifications to taxpayers, you are making counties and their taxing subdivisions less accountable to taxpayers when they aim to exceed the revenue neutral rate. This has been mentioned in some of your conversations already. To me, it's clear that any taxing subdivision seeking to exceed the revenue neutral rate should have a financial stake in the required notification process, skin in the game, if you will. HB 2002 does the opposite. It weakens the concept of local accountability within KSA 792988 when these entities don't bear the cost to provide taxpayers notification. The state should not be providing a free lunch to counties and their taxing divisions seeking to exceed the revenue neutral rate at the expense of taxpayers within counties or within other entities which have exercised restraint against expanding their budgets. Again, a point that's been already made. Now, on a personal level, the concept of financial skin in the game for your decisions is a code I live by, and it should be one local taxing subdivisions are also required to live by as well. I can bore you for a few minutes by saying that my family was one of modest means growing up in New Jersey, and as the youngest of 3 children, I was the first in our family to attend a 4-year university. My parents, recognizing the opportunity I had to attend a world-class learning institution, did everything in their means to get me there, accepting great financial risk for me to allow me to do what they could have never thought was possible a few years before. But besides me honoring my parents for what they were doing for me, I had a financial skin in the game. I took student loans. I had a grant that required work study. I was expected to work in the summer to pay for my education and my daily expenses. So a financial skin in the game made me more accountable to my personal decisions as I left home and became responsible for succeeding in my education. And even though my children are in a much better place than me today, I have the same role for them. Financial accountability, skin in the game when you go to school, whatever you do. It increases their responsibility and their awareness of what they're doing. So I think, if anything, the legislature must examine ways to strengthen the provisions within 792988 and increase accountability and transparency to taxpayers. Within respect to the cost notifications incurred by the county, as mentioned, there's already something within the bill to prorate the cost to each taxing subdivision looking to exceed the revenue neutral rate based on the number of mills they are seeking to collect. To me, this brings accountability for exceeding the revenue neutral rate to the elected officials who are responsible for the decision. And that is the way it should be. Thank you for your opportunity to speak. Take any questions.
Thank you for your testimony. Committee, are there any questions? Seeing none, thank you again for your testimony. Our next conferee is Rick James, a former county commissioner of Lynn County. Welcome to committee, sir.
Thank you, Chairman and committee members. And yes, my name is Rick James. I'm a former county commissioner for 2 terms in Lynn County. I'm here to give my testimony on House Bill 2002. And the state should continue to fund indefinitely the cost of printing and postage for our counties by eliminating the state-funded portion of Senate Bill 13. It places a financial burden on the counties. It places a financial burden on the counties. The Lynn County's bill last year alone was $10,000 for with a population of less than 10,000. Some of the opposition and anger from county commissioners when the first Senate Bill 294 was introduced was that the state would eventually pass this financial obligation back onto the counties. Here we are today facing a financial debacle over state funding of postage and printing, a law that was placed on local governments because of trust. I testified in favor of the first Senate Bill 294 because I believed it was a bill that would effectively save and help protect taxpayers' money from local governments. Lynn County itself has been revenue neutral for the past 2 years, and we had to cut $1.1 million out of last year's budget to do that, out of a $12 million budget. In addition to that, this year alone, several of our cities, school districts, and townships have went revenue neutral. So I believe it's infectious to a point. The bill works and it generates thoughts for leaders. It holds them accountable to the public by requiring them to be notified of potential raise in the revenue neutral rate. The bill ended an era of collecting the money and putting it into a budget and approving it. So I ask today that you, and I know it says proponent, and I was an opponent. When I read the bill, I will say this, that it looked like you marked out the 2 years and it was going to get dumped back onto the county. So I am for the state continuing on to fund this. And if there is a question, I can answer it if you have a commissioner question.
Yes. Thank you for that clarification. I noticed that immediately when you started talking. That was probably a miscommunication. So, committee, are there any questions for this conferee? Seeing none, thank you again.
Thank you very much.
And committee, I did fail to mention, but we have a substantial amount of written only proponent testimony that I would encourage you to read. We do have also written testimony, I believe. I don't see Dave here. Neutral testimony from Dave Trobert, Kansas Policy Institute. That concludes all of the conferees that I have listed. Was there anyone else wishing to appear on House Bill 2002? Seeing none, we will close the hearing on House Bill 2002 and move on to our next item of business and open up House Bill 2026 for a hearing. And I would turn to the revisor's office for an overview.
Thank you, Mr. Chairman. House Bill 2026 would require the Secretary of Revenue to file a release of a tax warrant in the county where such warrant is docketed upon the full payment of the taxpayer by the taxpayer of any taxes owed, which would include any interest, penalty, and fees required for the filing and the release or the satisfaction of the warrant. And with that, I'd be happy to stand for any questions.
Committee, are there any questions? Just for clarification, when we're talking about a tax warrant, that's like a lien against the property for unpaid taxes. Would that be correct?
Correct. If there's any specifications, I may defer to revenue if they have more, because my expertise in warrants is pretty limited. So if they can't answer your questions specifically, I'll be happy to follow back with them.
Okay, thank you. Committee, any questions? Seeing none, thank you for that overview. And we would next turn to Department of Revenue.
Mr. Chairman and members of the committee, Kathleen Smith with the Department of Revenue. House Bill 2026 would have no impact on state general fund receipts. The Department of Revenue would be required to file the release or satisfaction of the warrant for between 35,000 and 50,000 taxpayers annually. The court cost to file the release or satisfaction of the warrant is approximately $46, and we are assuming that this fee would be added to the amount owed by the delinquent taxpayer. The bill would cause the Department of Revenue to create a new collection, tracking, and payment processing system for filing all releases or satisfactions of the warrant issued. And with the effective date of 7/1/23, we might have a small problem in trying to get that implemented by then. We would prefer an implementation date of January 1/2024, if at all possible. With that, I would stand for questions.
Does this mean that the warrant would be double filed then, both by the homeowner and the department, or this is just be the department?
It would
now,
be the Department of Revenue taking on that responsibility. Right now, it is with the taxpayer to file that.
Okay, and do you know if each county has its own separate, is that a standard fee, or are we gonna have to figure out what 105 different fees are to assess those?
May I request Jay Beffert,
Certainly.
our general counsel, to provide some more information?
Certainly, thank you.
Thank you, Chairman Smith and members of the committee. Jay Beffert, General Counsel. Short answer to your question is we did a little research on this. The fees have pretty much been unified as $46 for the last several years. They used to be scattered all over the place. So we shouldn't have 105 different, which makes it nice for everybody. And I think your other question, Chairman, yeah, the tax warrant creates a lien on property, real estate by virtue of the filing. To create a lien on a personal property, it has to be actually executed, at least under state rules and current statute. Yeah, if that helps.
That does. Thank you. Committee, are there any further questions? Representative Bergkamp.
Oh, thank you, Mr. Chairman. I guess in this memo, it says that you need one more full-time employee to review them. How long does it take to review like a tax lien? I'm just curious what that process would look like.
Most of the times, if the tax warrants are all paid in full, it takes minimal amounts of time. What we're concerned about with this and what the justification for that is that we're going to have several out there that taxpayers simply have gotten their satisfaction of judgment of their release and they just haven't filed them. We think when this shows up as becomes law, which is really going to be helpful for the counties and the state ultimately, there's going to be a influx of several of these, because the reality is, and having done this work for a number of years before I moved into different, I went to the U.S. Department of Justice a number of years ago and then came back about 5 or 6 years ago. We found that taxpayers would get their SOJs, satisfaction of judgment. They take it to the county and they realize they had to pay a fee, and they say, well, okay, I'm not going to pay the fee, so I'm not going to file it. Well, 5 or 10 years later, they might be doing a closing on some piece of property and that SOJ isn't filed and they'll need to do it then. So down the road, they find that they have to file it, we'll just reissue it. And that's the circumstance where additional people are needed to review those old tax warrants. It's kind of a long answer to a short question, so it's cleaning up all those old ones that are out there. And if I might add about this, what's going to be helpful to the counties, I know this is beyond the scope of your question, Representative, but I think the counties are going to find that there might be an influx of fees that come in because of this. They're sitting out there with a lot of tax warrants that have never been satisfied, and all of a sudden they'll get their fees for it.
Thank you.
Representative Francis.
Thank you, Mr. Chairman. So just so that I understand, what happens right now is they get the release of judgment, you mail it to them. In this case, rather than mailing it to them and then paying the money to file it, which they often don't, you will file it. And almost in a sense, you're going to save hassle because you're not going to have these guys calling you up 10 years later trying to get something that they've misplaced.
Yeah, that's exactly correct. We're hoping that this will take care of that, so we don't 10 years from now, using your example, Representative Francis, that we're not going to have these old stragglers that are out there, if you will. And it happens. Sometimes people get busy. We all get paperwork and we just set it aside. So there's a lot of innocuous reasons why this takes place, but I think down the road it's really going to help.
Committee, any further questions? See none. Thank you for that.
Thank you.
Okay, we have one proponent. I would open up the proponent testimony and welcome Terry Taylor to committee.
Mr. Chairman and committee, my name is Terry Taylor. I'm with the Assured Title Company. I've been in the title insurance business. Can you hear me?
You might just pull it down a little bit. There you go.
There you go. Okay. Again, I'm Terry Taylor. I've been in the title insurance for over 50 years. And one of the things when we get an order for title insurance, it's usually, for a sale of real estate or somebody wants to mortgage a property. So we have to go to the courthouse and check the real estate and also all of the parties that are included in that transaction. One of the main things we check is the state tax warrants because they are filed against individuals and businesses, and then they become lien on real estate that they have an interest in. So what I have found through the years is just like the gentleman was saying, the people come in, they pay their tax warrant, and they give them a release, and at the bottom of the release, it says, please go file this in the district court. Most people don't hardly even know where district court is some of the times. And so they go home and they put it in a drawer. And then comes time when they happen to be involved in a real estate transaction, we find the lien against them and we say, oh, no, you've got a lien against you. Well, my solution to this was, I think when they go to pay their tax lien, you should also collect that $46 or whatever the fee is at the time and file the release in the county where you originally filed the lien. And I think that would take care of a lot of things down the line. I don't know what the cost of that would be, but I know it would certainly help your people where the state tax warrants are, that they don't get a call from me every 2 or 3 days trying to find out whether something has been released or not. So if there's any questions, I would be glad to answer them.
Thank you for your testimony. Committee, are there any questions? Representative Wassinger.
Thank you, Mr. Chair. Thanks for being here because I own a title company in Ellis County and Brooks County and Trigo County. So I'm familiar with your burden.
Yeah.
It seems to me that when you take money out in a mortgage, when you pay it off, the mortgage companies pay for the release to be filed. Correct?
Sometimes.
So in most cases, I would think that if you have, you're releasing a lien on someone, you should be filing that release for them because you're the proof for taking this off the rolls. So I think it's important that the state take this on. They filed the tax lien, they got paid off, they should be immediately filing it. And if like you said, if we need to be charging more for paying off a tax lien, adding the filing fee, then it needs to be done.
Pay the filing fee regardless of whether it's to the state or when they take it to district court. So to me, I don't see any reason why they just can't collect everything at the same time.
I'm agreeing.
File it. Most everything's e-filed, so it's scanned in and filed, and it's done.
Thank you. Thank you, Mr. Chair. Thank you for being here.
Thank you.
Any further questions, committee? Seeing none, thank you for your testimony.
Thank you.
Committee, that is all of the conferees that I had listed either as proponent, opponent, or neutral. Did I miss anyone else wishing to appear on House Bill 2026? Seeing none, we will close the hearing on House Bill 2026. And committee, that concludes our business for the day.